Yo, what's up, everybody? It's Stocks and Stoves with Dad. And today is Wednesday, April 15th. It's 10:36 p.m. in the evening. And I just want to catch up with you guys, my folks, and all of my subscribers to let you know I appreciate y'all. And it's been 2 weeks since I dropped a full video, so I just wanted to update you. On the last video, if I'm not mistaken, and I'm not talking about my short reels, but I'm talking about my videos, I was sitting at $22,000. Right now, 2 weeks later, we're at $24,000, 824, 806.89. So $24,807.31. Of course, we're in after hours, so if you see the numbers moving, that's because of that. So currently sitting in the crypto portfolio, I have 5.69% of my assets. That's $1,400, $1,411.51, and at the moment we're up 5.32%. As you know, crypto has been very red. I'll go over it briefly, but let's go over the rest of the total portfolio. In my taxable account, I have weight asset of 63.11% of my assets, which the majority of my money is in that account. And we're talking about $15,656.75. Currently, we're up for the day, positive 7.30%. And lastly, my retirement account, which is my Roth IRA, currently weighted at 31.20% of my total asset, currently sitting at $7,739.92. That's 3.29%. So that's what we're looking at. And I just want to talk about a few things and go over the different portfolios here. And we're going to go ahead and start off with the I actually want to start off with the Roth IRA. So the Roth IRA is my baby account because I started it at the end of 2025. And with all the experience that I have in my taxable account, where I made mistakes, where I was chasing hype stocks and using the market like you're almost gambling, and it placed me in a bad position because I thought I was doing the right thing and following hype and following YouTubers and just chasing whatever they were chasing or listening to the news. And it actually did me a disfavor. So with all that experience, because in those losses, there was lessons. So with all that experience, I was able to open a Roth IRA account. And when I tell you that thing has been green, and printing money, I just love the fact that I was able to establish this account, and in a short amount of time, I haven't even had this account for 6 months, and you can see it's at $7,737.51. I did max out my Roth IRA for 2025 with a 7K, and 2026 they've increased it to $7,500, so that's $7,500. And for the year, I already contributed $100, and then the IRA matched me 3%, so I made $3 on that $100. Currently got a buying power of $551.92, so I can go shopping on any given day of the week, except the weekends when the market is closed, that is. So currently with SCHG is one of my top stocks, ETFs in this portfolio, and I don't have individual stocks in this portfolio, and I'll tell you why. This is a taxable account, not taxable, I'm sorry. This is an account that has tax preferences and where you could save with taxes because it's an IRA. That's an individual retirement account. So it's different from a taxable account where you get taxed right here and there if you want to use your money and at any moment, where the Roth IRA is really for your future, is for, you keep it for a certain amount of time, and when you retire, you can pull the amount, all of your money's out without getting hit with taxes. Where a taxable account, they tax you right then and there at the moment when you sell, when you buy, when you trade, you get taxed immediately, versus Roth IRA, they'll tax you later, or if you wait until you retire, you can pull all this money out and you don't pay taxes on it. So SCHG is one of the ETFs that I have in this portfolio, currently sitting at $32.18. and I have 120.32 shares. So let's open that up and see what it looks like. Okay, so 120 shares at an average cost of $30.02. Today I made $80. That's positive 2.13% without lifting a finger. Currently, the stock itself is sitting at $32.18. So I am currently profitable at total return of $259.61. That's a 7.19 total return percentage. So that's freaking great. I almost swear, but I try not to swear on my channel. Currently, the portfolio diversity of this position is sitting at 53.88%. So a majority of my position is into this share actually, and it's currently at a market value of $3,871.92. Currently, I have recurring investments going to this position. That means every day that the stock market is open, it automatically puts in $1 into this account from my bank account. And I only do that because we as people, we're consumers. We spend all kinds of money on shoes, purses, backpacks, drinks, juices, food, even things we don't freaking need. Where in the market, it's really like you're investing into yourself for today or into yourself for tomorrow, for the future. So for me, I feel like if I can get up and pay a gym membership or pay a card note or put gas in the car, why should it be a problem to invest in yourself? And I mean, $1 a day, come on, that's $5 a week. It's nothing. It's nothing. And you spend that on candy, you know what I'm saying? So I do that just to say it's a responsible thing. Also ensuring that I invest into myself every day, no matter if the market is up or down. But obviously, just investing $1 a day is not going to really get you anywhere, but it's a start. And this is something new that I'm doing just for the days I'm feeling lazy or I don't feel like looking at the market. I know I got an automatic reinvesting that's going into my account. And sure, there's times when I wake up and I say, hey, I'm going to spend 200 today or 300 or 1,000. You guys watch my channel. You see me do it. I wake up and I say, today I have in my heart to spend 600 and I go and spend it. So the $1 a day is just to know I'm always doing something without even thinking about it. So that's SCHG. And another thing I want to talk about SCHG is that because it's an ETF and this one's a growth ETF, it's heavy on technology. So let's talk about the sectors. It's technology, consumer cyclical, financial services, consumer defensive, energy, utilities, communication services, healthcare, industrials, basic materials, and real estate. And you can see the top 4 is technology, consumer cyclical, communication services, and healthcare. So let's look at the top 10 holdings real quick. And I'm going to tell you the importance about ensuring that your EFTs is not overlapping, so you won't be heavily weighted in one sector versus another, because it could really drain your portfolio. So like I said, this one is heavy on technology. As you can see, NVIDIA, 11.91%. Microsoft, 7.39%. Alphabet Class A, which is Google, 4.85%. Alphabet Class C, which is Google again, 3.87%. Tesla, 3.38%. Apple, 9.86%. Amazon, 6.06%. Broadcom, 4.66%. Meta, 3.71%. Eli Lilly, 2.75%. So as you can see, this is heavy on tech. This company pays me out every quarter, and I love the dividends. And this is why this position is in my portfolio, and I'll continue to build it out. Currently sitting at 120 shares, my heaviest position in this Roth IRA. And let's talk about its cousin, SCHD. And SCHD is in my portfolio because they're a heavily quarterly paying dividend aristocrat. And I love dividends. Who doesn't like paying into a company, owning a portion of companies, but also getting paid from those companies quarterly, monthly, or weekly? So I enjoy SCHD. It's currently sitting at $30.69. I bought it at an average cost of $30.17. So I'm positive $34.49. That's 1.73% positive. Currently, it's 28.24% of my portfolio. I want to get it at 50%. So I am going to be making some adjustments between SCHD and SCHG. Currently have 66 shares sitting at a market value of $2,028.99. So with SCHG, I'm paying $2 every day. So there's 5 days in a week, unlike SCHG where I'm paying $1 a day. So that's $5 for the week. SCHD, I'm paying $10 every week, investing into the market, whether it's up or down. And why I like SCHD is because it complements SCHG. I like to call them cousin ETFs. And they're not heavily invested into the same sectors. So let's look at the top four here. Consumer defensive, 19.27%. Energy, 15.93%. Healthcare, 19.16%. And technology, 14.84%. Now let's look at the top 10 holdings. United Health, 4.41%. Chevron, 4.23%. Coca-Cola, 4.02%. PepsiCo, 3.91%. Amgen, 3.79%. Texas Instruments, 4.40%. Merck, 4.11%. ConocoPhillips, 4%. Home Depot, 3.80%. Procter & Gamble, 3.72%. Now you understand why I'm invested in SCHD. It complements SCHG. It makes fundamental sense for my Roth IRA. I get the tax advantages, and it follows the S&P 500 Trust USD. So that's the reason why this one is the second highest position in my portfolio. Now let's move on to the third because I want to get to my taxable account and not hold you guys for too long. VXUS. Unlike SCHG, which is a heavy growth and also heavy in tech, and then SCHD is into real estate and everything else as a foundation, the base of this portfolio. VXUS exposes me to the international stock market. And it's out of the other two shares that I have positions, SCHG sitting at $32, SCHD sitting at $30. VXUS is a little bit more expensive. It's sitting at $82.89. Hence why I only have 15.50 shares. And the other ones I got all over 100 and stuff like that. This one is going to take a little bit more work because it costs a little bit more money, and money don't grow off trees. And I work hard for my pennies, so it's going to take me a little bit more time developing this portfolio, this position. So one thing I could say is I got it out of an average cost of $77.17, and it's currently sitting at $82.89. So guess what? I made a lot of money. So total return currently sitting at 7.42%. Imagine if that was thousands and thousands of dollars. I would have been all the way up. But, that's positive 88.71. Currently sitting at a market value of $1,284.83. And I got a daily buy on VXUS for $1. I'm actually going to up this up because this position is the more expensive of the two, and it's going to take me a little bit more work to get it where I want to. So I just want to read this out to you guys about the Vanguard Total International Stock ETF. The fund tracks a market cap weighted index of stocks covering 99% of the global market capitalization outside of the U.S. The listed name for VXUS is Vanguard Star Fund Vanguard Total International Stock. So it's covering 99% of the global market outside of the U.S. So this gives me exposure to 8,765 companies that's outside of the U.S., which is foreign large blend, which makes this a great ETF to actually have in this portfolio as well. And it also pays quarterly. So I got 3 individual ETFs that does not overlap, which pays me out quarterly. So every 3 months, they send me a paycheck, and I'm loving it. All right, so that's my Roth IRA, guys. I'm not going to hold you too long. We're going to go ahead and move on to my traditional investing account. So I made some changes to my traditional investing account. Currently today I made $317.36. That's a 1.89 positive percent return for the day on this account. Currently sitting at $17,000. $75.28. The buying power is sitting at $13,984.10. And I'm actually using like $1,800 worth of margin. Obviously, $1,000 of that margin is actually at zero interest. So I'm taking advantage of that and making the best out of that situation. So we're looking at crypto. You can see crypto. I don't want to talk about it too much, but let's just take a look at it briefly. I'm holding XRP, Bitcoin, Solana, and Ethereum. Crypto has been, I guess, going up, doing its thing. It's been a bloody mess for a while now, for some months now. But today I'm up $33.84. That's a 2.45% rate. Okay. Realized profit and loss. I believe I lost a little bit in crypto when I sold a position, $58.70 since 2025. But remember, you don't lose if you hold. You lose when you sell at a deficit. So right now I'm just holding out on these positions and, allowing them to stake. And if I have extra change, I'll throw towards the crypto. But outside of that, I'm not really trying to do too much with the crypto, okay? Now let's take a look at what I really want to talk about is my stocks and ETFs. So currently, as you know, I'm building out my Apple and my Amazon positions. I have ET, which is energy transfer, which pays a really beautiful dividend, and I'm enjoying ET. Let's just take a look at it real quick. I got 200 shares at an average cost of $12.72. Currently, I have a total return of positive 47.12%, which is profit $1,203.40. Currently sitting at $18.72. So I'm loving ET. What else? I got 100 shares of SoFi. I believe in SoFi. I think it's more than a banking institution. It's technology driven, and that's a position I believe in, and I'll continue to build out. Currently at an average cost of $16.29. Currently sitting at $19.26. Total return positive 18.22%. That's $298.21. So I'm happy with that, man. SoFi used to be at $30 at one point. It was overvalued, and right now it's regulating, it's doing what it's supposed to do. So I'm happy about that. One of the newest positions I had obviously was Netflix. I got Netflix at, an average cost of $83.13. Currently have 10 shares, and Netflix is now at $107.99. So I'm at a positive 29.91%, and that's equivalent to $248.52. So I'm getting paid, baby. Today I got $17 from Netflix without lifting a finger. So we like that. What else? I could talk about Apple and Amazon, but those are my babies. Currently have 17 shares of both. Apple currently sitting at $266.77. I got Apple at an average cost of $164.52. Currently positive 62%. That's a total return of $1,825.52. Market value $4,763.13. And today I made $141.59 on Apple. So thank you, Apple. What else? Let's talk about Amazon. Amazon is currently in the red. However, I got 17 shares at an average cost of $134, and it's currently sitting at $248. So I have a total return of positive 84.5%. So I'm in profit, $2,015.54. Market value of $4,400.74. Thank you, Amazon. I love you. I appreciate you. What else? And that's really it, guys. So, no. I forgot about talking about two positions. Two positions that I recently added was SPYI and JEPI. I've added those because they pay me out every month. They don't pay me out every quarter. They don't pay me out every year. They pay me every month. So I started off both positions with 10 shares. They're not cheap. So I started off with 10 shares. Now let's see what that looked like with SPYI. SPYI is a NEOS SP500 high income ETF. Currently sitting at $52.25. At an average cost, I got it at $49.93. So I'm already in profit, positive 4.66% at a market value of $522.50. Total return of $23.25. And I can't wait to see what those payouts looking like. And I'm looking forward to the SPYI. And I only place these positions into my taxable account because I could use the funds that I receive to pay off my margins and continue to use margins as leverage to invest into stocks that are paying me out. It's just like taking a loan or using a credit card. The only difference is I'm not paying those high rates that credit cards are offering or the high rates that the bank loans are offering. I'm getting it at a really, really, really low rate. And SPYI is heavy in technology, communications, consumer cyclical, financial services. Let's look at the top 10 holdings, which we're always going to need these companies right here because they move the market left, right, up, and down, and they usually go up. So Nvidia, Microsoft, Google, Tesla, Apple, Amazon, Broadcom, Meta, and of course options on the SP 500. So I'm liking SPYI, man. It aims for tax efficiency and high monthly income by actively investing in stocks and options on the S&P 500 index. Booyaka! You understand me? I know you understand. More fire, more fire. Now let's go to JEPI, guys, and I think this is the last, might be the last position I'm going to discuss today. Currently have 10 shares of this. This is the JP Morgan Equity Premium Income ETF. And this one does the same thing, brother. It pays every month. So I needed that income coming in every month because I'm tired of the rat race. I'm tired of hamster wheel. These jobs don't love people no more. They only use you. And one day I want to retire, not at 65. I want to retire early. So I'm doing what I need to do right now to invest in myself right now for my future self tomorrow. So this is my journey. You don't have to copy me. I hope that I inspire you. I'm not a financial advisor, but this is my journey, and I'm sharing it with you guys because this is what I love to do. Currently have 10 shares at an average cost of $56.55, and it's currently sitting at $57.75. Tell me I don't know what I'm doing something right because I'm just winning. You see what I'm saying? I'm just winning. So I'm going to slowly build this out the same way I'm building out SPYI. This and SPYI are my income players to boost this account up and also use the margins and also the stock energy transfer because it pay high dividends. Even though it's quarterly, I'm also going to use that income to boost this account up too. Get what I'm saying? So I'm going to slowly build this out. It's only 3.06% of this portfolio. And just to give you a little bit more about this, JEPI is an actively managed fund that invests in large cap U.S. stocks and equity linked notes. That's ELN, equity linked notes. It seeks to provide similar returns as the S&P 500 index with lower volatility and monthly income. You see what I'm saying? And let's look at JEPI. 18% technology, 14% industrial, 14% healthcare, 11% consumer cyclical. And the top 10 holdings, you see why I like JEPI with SPYI? They don't heavily overlap. You know what I'm saying? Look at that. Halmet Aerospace, Next Extra Energy, Amazon, Eaton, EOG Resources, Ross, Johnson & Johnson, Train Technologies, Broadcom, RTX Corporation. That's why these two are in this portfolio to help boost my other position and boost themselves. And then I got Kill, which was formerly known. They recently changed the name, and I'm trying to remember the name, the original name. But this was just an income play. I was trying to make some money real quick. I bought it too high, so I've been waiting for it to come back up so I can recruit my money and make some Benjamins. I bought it at an average cost of $3.22. It's currently sitting at $2.82. It really was doing bad, but it's been slowly recovering. You see what they're saying here. The 9 analyst ratings say 89% buy, 11% say hold. So at the 52-week high, it was at $6.60. The 52-week low, 70 cents. So as soon as I'm in profit, I'm going to take my money and I'm going to sell that junk and put it into something else. So guys, basically, this was my update for you guys. I just wanted to know what I've been doing, and I hope you guys are still investing. And don't let the market volatility scare you. Sometimes it creates more opportunity. That's the world when we're living in. Some people capitalize off the top, and some people capitalize off the bottom. You got to know how to capitalize at the top, in between, at the bottom. When things are going bad, you got to know how to make money. When things are going good, you got to know how to make money. You just got to know how to make money all the time. And excuse me. And don't get caught up in the rat race and end up losing your job and you're just stuck, you know, and it happens to the best of us. So the economy is shifting. We're in a crazy place. The world is crazy. There's wars everywhere. Keep God close. Continue to invest. Please like and subscribe. Repost this video. Leave a comment. I would really appreciate it. And you guys tell me what you think about what I'm doing and my investment styles and what you might be doing that's similar, or any advice and things of that nature. I'm trying to hit 30K soon. I'm like $6,000 shy, but I'll be there. And I know I'm going to be there very, very soon. And then I'll work my way towards 40, 50, 60, and I can't wait till I hit 1,000. You know what I'm saying? 100,000. That's my goal, and I want to do that in the next 2 years or so, and I'm gonna do it. Remember this video. We're gonna come back to the video and say, damn, I remember when he was at 6,000, 10,000, 11,000, 15,000, 20,000. Look, I'm at 24,000. It was like yesterday. I only had $1,000 in this account. But you see what consistency do? When you're consistent and you know what you're doing, and you make some mistakes, but you don't whine, you don't cry, you don't run, you don't sell. You just continue to excel and move forward. You get to see it happening like right before your eyes. So anyways, that's almost 30 minutes. We had 28 minutes, man. I love you guys. The Stocks and Stoves with Dad. Catch me on another one, because you know it's going to be another one. Peace and love. You understand me? Peace.